The word on Wall Street, top investors watching your money. Joining me right now is Markowski Investments President Chris Markowski, Payne Capital Management President Ryan Payne, and the University of Akron Endowment Fund Chairman Dennis Gartman. Great to see everybody, gentlemen. Thank you so much for being here. Chris, kicking things off with you with this incredible rally underway this morning. The Omicron concerns apparently waning, with the Dow Industrials up another 335 points, about 1%. This morning, we understand GlaxoSmithKline announced that its COVID-19 antibody treatment is effective against the Omicron mutations, according to new data from early-stage studies. Chris, your thoughts on what's going on this morning on top of another big rally yesterday? Dow Industrials up better than 600 at the close.
Yeah, I think some of the panic porn has gone away. However, there's most certainly political risk out there. As you mentioned, Bill de Blasio trying to burn down the city. You also have a gubernatorial candidate here in the state of New York that wants to bring back complete mask mandates for the entire state, which is patently absurd. So that's really what's lurking out there. There's been some great columns out as of late. Mark Siegel in the Wall Street Journal talking about how mutations are not necessarily a bad thing. These are things that we should have known ahead of time. But the instant reaction by many in the mainstream media is to get everybody freaked out. And what's kind of interesting about the entire thing was the timing of it. This Omicron news coming in a slow trading day, the day after Thanksgiving, which kind of pushed everything, I think, a little bit more over the edge than it normally would have been.
Yeah, a lot of people told me that they were not buying all the worry on that Friday with volume so low, and that's the day that they chose to come out with these new restrictions in terms of travel. So would you buy this market here at these levels then, Chris?
Well, yeah, because one of the things that I like to see as well is that some of the companies, there's a little bit of froth that's come out of the market. Goldman Sachs actually has an index in regards to technology companies that are not profitable. And that index is down, I think, a little bit over than 25%. About 50% of the IPOs that have come out this past year are actually down. Which means some of the froth has come out of the market. I own quality companies out there. And again, you can look for some from value than some of these things that have come off, but some of the froth has come off the top.
All right, Ryan, I want to turn to what we're seeing in this innovation on vehicles. Intel is now planning to take its self-driving car unit public. That's Mobileye. The IPO plan for next year could potentially value this company at more than $50 billion. Your take on, I guess, really creating value out of Intel?
Yeah, well, I'll tell you what, Intel made an awesome investment because that company was worth $15 billion when they bought it in 2017, only 4 years ago. The company's revenue has tripled over that time frame, and it makes sense right now. It is a hot IPO market. We're talking about SPACs, where there's a traditional IPO. And just to put in perspective right now, we've had $600 billion raised in IPOs this year in SPACs. That's the highest level ever. And the highest before that was 2007 at only $400 billion, right before the great financial crisis. So, it makes me think there's some bubbles out there as well, Maria. So from Intel's perspective, it was a great investment, great time to get some liquidity, and they can focus on what they do, and that's manufacturing chips. They're the largest semiconductor chip maker in the world, and they've kind of languished behind NVIDIA and its micro devices over the last couple of years. So this gives them some cash. They're looking to build 2 factories in Arizona. It's going to cost them $20 billion. So this will go a long way towards really just reinvesting in chip making, and that's essentially what they've been kind of like getting focused on again. So, I think it's good for Intel. No, go ahead,
good for the country, too. Yeah, no, it's good for the country as well.
Great for the country.
We've been talking about Samsung's $17 billion investment in Texas, and of course Texas Instruments also investing in Texas. So perhaps this manufacturing increasingly is going to happen in the United States. Dennis, we want to look at oil, though. Having said all of that, we've got another rally this morning. Oil prices up 2%, 3% actually right now, back up to 71.72 a barrel on crude as the fears of the Omicron variant wane. Prices are also being affected by stalled Iran nuclear talks, which will further delay the return of Iranian crude to the market. Dennis, your thoughts on the supply-demand dynamic for oil right now?
Well, first of all, let's look at the term structure. There's a little problem that exists given the fact that we took crude oil from, $82, $83, $84 a barrel for WTI down to the middle 60s. We're bouncing into the middle 70s. And normally when that happens, when you get a good bounce, as we've had for the past 3 or 4 days, you should see the front months leading to the upside, and they're really not. The term structure is where the informed money leaves its footprints. and the term structure has been narrowing even as we had a market that rallied. I think what we're seeing here is a bounce predicated upon, one, the talks today between President Putin and President Biden, which may go awry or which may work, but there's a concern that the United States will do something to distend Russian exports of crude oil. Also, the fact that the Chinese yesterday announced that they were going to cut their reserve requirements, which I think is bullish for stocks generally, but that's been supportive for the crude oil market. However, I do not think, unless something really untoward happens today between Putin and Biden, and the talks go totally awry, I can't imagine that we're going to get much above $82 or $83 a barrel again. And I think it'll be very difficult to do so. If they do go awry, all bets are off. They could go anywhere. But the fact that the term structure is acting bearishly as the market bounces from its lows is a signal that this is just a bounce, a technical bounce after the break that we had over the previous two weeks.
Well, I'll tell you, my sources were spot on when I talked about what I was hearing about Friday's move. Low volume, low liquidity. The day after Thanksgiving is the day that we learn about Omicron and all of these restrictions that the administration put in place. I spoke with several sources who were questioning that 13% sell-off in the price of oil. And here we are back above $71 a barrel. They were totally right on that. Bottom line, Dennis, would you buy oil at this level? Do you think it's going higher?
I think it goes maybe to $81 or $82 a barrel, tests the highs of last week or 2 weeks ago, but I doubt that it gets much through there, if at all, unless, of course, we have something untoward that happens between Russia and the United States in the talks this afternoon. So
got it.
At this point, I think you get the bounce will continue, but I don't think it makes new highs.
All right, we will leave it there. Chris Markowski, Ryan Payne, Dennis Gartman, always a pleasure, gentlemen. Thanks very much for the great word on Wall Street, and have a good Tuesday to all of you.